Hey everybody, it's Pete Carmasino here at Chaikin Analytics. This is our halftime show on StockCharts TV. Each and every week we go over the markets, talk about what's going on. What's happening here today is a pretty massive rally. And, we have a plugin here on the StockCharts platform, on the ACP platform. The Chaikin Analytics plugin basically gives you our 20-factor model, and it gives you the rating on each particular name that we rate. Now, we rate about 5,000 some odd names. And if they're new IPOs, it takes about a year for our rating to kick in. But you can see the ratings changes pretty clearly and kind of understand. And we've done a ton of videos on these. So we'll try to look back and learn about what the power gauge does. But essentially what it is, it's a fundamentally based power gauge rating, right? And a rating meaning we have a gauge, about 20 factors. And I'll look at it today. We're going to look at one name that I think everybody's kind of interested in, of course, part of the FANG group. But we'll look at that particular power gauge rating, the setup of all the factors today. And not only the setup of the factors, that's the fundamental side. And I say fundamental, it's about 85% fundamental that creates the rating. And the rest is technical. And so when we say technical, it's things like indicators on our charts, relative strength rating, long-term moving averages, Chaikin money flow. Mark Chaikin is famous for creating. And we'll look at those. But, we like to take sort of a macro view of what's going on in the market first, right? I mean, this is earnings season. We're going to start seeing names come out with earnings, obviously above, below, in line with estimates, but it's really more about guidance. We say that all the time. And trading in earnings season is really dangerous. We don't recommend it, but unless you feel like you've got a strong enough position, you've got a strong enough hedge, and you're feeling good about it, obviously you have to do it based on your own risk tolerance. So with that, we'll start to look at some names here that make up the FANG Plus Index. And the FANG Plus Index is about 10 names. Mega cap tech, which have really been beaten up terribly. But there's one name that's sticking out, and it's Netflix. And we'll take a look at that. Now, that was one of the first to kind of roll over and really get hammered this year. A couple of gap downs based on news, based on earnings, definitely based on outlook. And so when you get that, you have to kind of remember that the markets do look forward. It's great to have past numbers come in line and all that, but it's really about guidance. And so we have to pay attention to that. We'll also just look at the macro view of interest rates. We talked about the dollar several times on here, and we know the dollar is strong. That's going to basically be a headwind for a lot of tech names, but international names as well, names that do business around the world and have a foreign exchange, and a currency issue. And I say issue, it's more or less customers not being able to afford more of the products worldwide, only because their currencies are weaker against our dollar. So they need more of their own money to purchase our goods in our dollar if they want to convert it into our dollar. So look, that's just a quick view of it. Let's dive into the charts and start to look at what is setting up in that FANG index. But we're going to look at the macro view first. So let's dive in and see what we say. Okay, I like to start off and look at sort of the sectors, just at a quick sort of a glance, a candle glance is what the feature is called on the dashboard of StockCharts. And it's great. I got the arrow next to the S&P, so you know where we're starting there. The rest of the names here are obviously the sectors. So you've got discretionary, communications, energy, which has been pretty strong, and really one of the only stronger charts here on this view. Now, the other one that was a good performer has been industrials, but I mean, relatively speaking, it's been good, but really there's not a lot of alpha there. Not yet. It could turn, but it's done better. And, just everything is really in the downtrend here. I mean, this is just a situation. We're in October, right? What do we know about October? October is, people call it the bear killer. People call it, where most market crashes happen. Unfortunately, history does show that, obviously. But there have been areas where the markets had started their downtrend much earlier. For us, in this year, in 2022, we really started this in January. And this is a long time in the making, right? We're going on, 10 months here of really a grind lower. And you can just look at the chart here, and this is only about a 30-day view roughly of these charts. And you can just see the volatility just by looking at the action on the chart. It's been really high volatility, and you can't ignore that. Obviously, it's just part of the deal. So let's take a look at the next slide. We talk about these patterns all the time, and I did this many, many times. I like to just kind of reiterate this because now I do have a target on this 33.82. We got close. We really got close. 34.91 on the low. just a few days ago. But this is from the 29th. We talked about these two areas, 4,300 being the area where the market stopped that move higher, obviously. Um, and it just, for me, it was coincidental. It could have been an algorithmic trade, of course. There's no doubt about that. But more likely, it was that neckline of 4,300, and then 4,100 has come into play many, many times. That was the 29th of August. So you just go. Let's look a week ahead, or a few weeks ahead, because I skipped 1 week there. It rolled over back to, and then came back to 4,100, and then took out that low again. And then here we are, obviously, in the 26th of September, getting back to that target that it had already hit in the June, July range. And then obviously where we are today, this was just last week. And obviously this morning I took this chart. Now I've got this target here, and that's the first kind of the time I put a box on this, right? You see my previous charts. I really don't have a box there. I had a line. It's kind of like a 29% or 30% drawdown, which is kind of average. I mean, look, that's part of being in a bear market. That's where you go. It's part of the deal. This is, I think the time frame here obviously is sort of just a projected guess in a way. But at the same time, the way markets are kind of patterning out and the way the trends are moving, this looks to be about where it could happen. I wish I knew for sure. I don't. But my point being is that this is, again, and I say this with trepidation, it's only a 29.8 or 30% drawdown. All right. It could be more. We've seen 48, 50, 55% drawdowns in some bear markets. So you got to be careful. That brings it into that 3,000, and dare I say, even with a 2 handle on it, potentially. Right. So a lot of factors into that. But that's where we are today. This is what I've been saying for weeks. I'm looking for the rally 4. I can't find it. Rally 1, 2, and 3 have really played out. Rally 4 looks like it's just taking its time here, and it could be setting up. We could see an 8, 10, 13% rally. We've seen that on average where these things have bounced. We've seen the sell-offs be more aggressive. I mean, the last sell-off is close to 20%. And so when you get that 2-to-1 ratio, and you get maybe a 10% rally and a 20% drawdown, you can start to figure out how long it takes, what's the average time. There's plenty of ways you can put some math and pencil to paper to kind of put your own projections together, but start doing that kind of work. Start to look at where we bottomed. What you can define it as the low print, or you can define it as the low close. Look at where it rallies. If you're taking the low print, look at the high print, right? Look where it started to stop, where it started to roll over, and then measure that, and then put an average on it, and then give yourself an idea of what to expect here. You may not be right. I may not be right, but the point is we have a discipline, and we know what potentially could happen. And then it's not you sitting there, geez, what happened? Or you're not wondering. You kind of knew what was going to happen, right? We knew October was going to be tough. We know when rates rise, bond prices fall. We know that that's a headwind for technology stock. This is not a surprise. Okay. Let's stop acting like it is, right? It's not. Here's this FANG index that we're going to focus on today. 3810 is a pre-pandemic high. The downtrend has obviously been intact. We talked about this for many, many months, if not over a year and a half. We've been kind of tracking that FANG index. The 10th, just last week, it kind of rolled over, took out the lows, and obviously got even worse. And now we're getting a bit of a bounce today, right? We're getting a nice headwind. So I did a little work. We have a little, a really cool feature on our Chaikin platform that, allows you to do what we call a health check. And this is one page, actually one part of a page in that health check. And I'll show you the whole thing when we go on the live system. But I look at these names. These are the constituents of what's called the FANG Plus Index. And there's no bulls in there as far as our rating goes. Everything's in a downtrend, including Apple. But here are your bearish names. Here are your neutral names. But look at the differentiation here between Netflix over a 1 week price change. Okay, that's divergence, right? You're seeing something change. All right, we see this all the time. And so against its peers, it's showing some relative strength. Okay. And it's also showing some relative strength against the S&P. Why do we know that? Well, we have a relative strength indicator, and B, if you look at the heavy weightings in the S&P, it's a couple of these other names, right? And so Netflix is outperforming them this week. Well, it's outperforming the index too. So we'll take a look and kind of look at that chart a little deeper. Sentiment has obviously been a big driver. It's been negative now for, we're talking, a month now, right? 4 weeks in a row. The low coming in September, on September 21st of That's 60.9. Haven't seen that in a long time. And look at the notes here from AAII. This week's bullish sentiment reading ranks among the 60 lowest in the survey's history. Okay, so that's pretty significant. So when sentiment gets overdone, the markets kind of tend to go the other way. That's what we're seeing today. A little bit of a short covering rally. Earnings come in. A lot of stuff can happen. Nobody wants to kind of stay short into a market that could have a catalyst higher. So you got to be careful with that as well. So we're just looking at the markets here. This is on the rate market. We had targets along the way here, right? We had these targets in that 2% range, 2.5, 3, then 350, and they all hit, right? We talked about this many times. Sorry, my mouse is jumpy today. The next target, I'm just extrapolating based off the trend here, is about 4.7 to 5%. That's pretty heavy duty, right? I mean, that puts that TLT in jeopardy to go much lower than some of the things we were looking at. We started talking about this, months ago in February, and then we started to talk about TLT being in a downtrend. When it got out of the range box, which was around 142, if I'm really splitting hairs, 135 was sort of that make or break level. It tested it and tried to rally. And once it couldn't get above there, that next leg lower was, I would say, pretty predictable. But the relative strength was negative. Money flow was negative. Things were just in bad shape here. The 19th of September, fast forwarding a few months, after a big rally higher over the summer, what happens when rates drop? Bond prices move higher, right? So they push the rates lower and stocks rally. That's where we get that big bull market rally. And then obviously we talked about the $100 target that hit this past week. I had a little fun video there, sort of a Top Gun theme that hit last week. And then here we are today. I still think the target is lower. This may surprise you, but if we get into that level of where we were, I still think we could probably see this target of 75 to 80 as a new target, which would be pretty detrimental, right, to TLT and any kind of bondholders. Okay, so that's kind of all we have for that. So let's jump into the live system here and take a look at some other things here. Okay, as promised, I said I would look at Netflix. What I'm seeing here is a relative strength change, right? We're starting to see this pop a little bit. It's obviously oversold. It's really one of the first FANG names. Now, a lot of them were breaking down around the same time, but this one really just kind of continued to break down with no reprieve. And finally, look, the base has been happening really since July, sort of the middle of July or so, all the way through to today. Here we are up about $15, about 6.5%. I would say that 250 is definitely going to be resistance. There's no doubt about that. Maybe even a little higher, 255, but 250 it looks attainable right now. Really, the way it's going today. But I said we're going to talk about the power gauge rating. So here are 20 factors. We weight all of these and come up with a rating, right? And so we've got obviously financials, we've got earnings, and these are some subcategories of this particular group. And then we look at technicals, right? There's a little bit of that percentage of, again, a small percentage of our rating is in technicals. And then obviously we look at some expert, which is interesting. Not a lot of short interest according to the way we look at it. So if it's got a green tilt, obviously that's less shorts against it. They could have been covering here. There's really no alpha, really. Netflix is pretty dominant in what they do. And the valuations got to a point where somebody felt a little bit less compelled to continue to bet against it, right? So I said I'd look at this health check real quick, and I'll do that very quick. So this is a report we create. It's really interesting. It gives you sort of an overview of what's happening going on. Obviously, we got the Chaikin power grid that kind of looks at the groups, weak stocks and weak groups you want to avoid. It's hard to say. And then there's that picture that I took for you today showing that relative strength for Netflix. All right, folks, in closing, I just want to say, look, October is a tricky month. It's a scary month. Halloween's in October for a reason. Pay attention. All right. Thanks again for tuning in. We'll talk real soon. We'll see you next week. Thanks. Take care.